Hello, Oracles. Well, Tesla closed under $150 today. $150 is a psychological level of support. Closing below it is not usually a good sign. We'll dive into the charts in a minute. But of course, this morning we had gotten the news that the poll did come out that he said he was going to be stepping down. We don't have any details from him yet on this, but also look back and think about the fact that he already told us from the beginning that his plan was to get the thing up and running and then find a leadership team to come in and take over afterwards. Again, by this poll as well, he did not give a time frame whatsoever on this. So this is really just according to his plan. Stephen Mark Ryan had spoken about the fact that this may have been spurred on by the fact that he's being tracked. He decided to go by what the poll says when it came to the doxing of his plane and said that's fine. He can go ahead and do that because the people said do not suspend them. But he just wants to protect his family. So perhaps this is something of him coming out and saying, it's time to find new leadership, but he doesn't have anyone lined up yet. So we don't know what the timing is going to be on this, but the poll came out saying Elon should step down as the head of Twitter. And now, of course, with that news, we had a nice little bump early this morning. We were up 4% pre market. That quickly sold off. The entire market was up pre market as well. Tesla did outperform the market. Tesla was about flat on the day. The NASDAQ was down about 1.5%. So Tesla did outperform. And I think most of it was because of the news about Elon stepping down as head of Twitter. But again, we are just in an environment right now that is not conducive for any sort of runs at all. This is not a market that you're going to be looking for returns on your investments. This is the kind of market where you want to accumulate shares. I don't know if we are at the bottom based upon macro information that we have been getting, based upon just the kind of timing and sentiment around a lot of things. I do still think that we have a little further down to go. Some people are talking about the SPY getting down to 320. It is at 380 right now, so that is still a significant drop that we need to go in the broader market. That in turn would end up bringing Tesla down with it. How far down could it go? I don't know. If we do come down to those levels, we may come down to 120, maybe $100 in the stock price. That's not me being bearish. That's not being negative on the Tesla stock itself. That's really just being realistic. And, I've learned a lot this year about the macro environment. That is something I did not know a lot about. I am still comfortable with what I have done with my portfolio this year, but I do have a smaller portfolio. So for me, what I had said from the beginning of the year still holds true right now, which is cash flow generation is going to rule the day. That is what I have focused on the most all year long. For those of you who have followed my videos that I put out on a monthly basis, or for anyone who is a member or patron, you guys see all of the numbers that I put out. You see that I practice what I preach. I am out here watching my expenses on a regular basis. I track it every single week. So every weekend, I track all of my expenses. I am looking for different ways to try and get any sort of income from other areas. I am working my tail off from 3:30 in the morning until 8:30 at night, Monday through Friday. And then on the weekends, I still do even more. I am busting my butt because these are the times where your money is really going to garner you wealth in the future. Again, fortunes are born during bear markets. It's not done by magic. It's just because people during those times during the bear markets were wise and put as much money into the market as they could. I'm not saying you should dump all of your money in right now. None of this is financial advice. I am just slowly putting little bits in here and there, and I have a lot of cash coming in from the outside so that I can put money into cash, I could put money into stocks, I could put money aside for real estate. I think 2023 is going to present us with the greatest investing opportunities that we have seen. Some of you have been around for a while and have been investing for 20, 30, 40 years. You've seen awesome opportunities like this. And if you have, please share in the comments below your experiences, what it was like going through times like this, through the housing crisis, through the dot-com bubble. Those times there, you look back, those are the times you would have wanted to buy. So those of you who have been through it, please share your experience. And for me, I can see that. I'm looking back at history. I'm a history major. That's one of the things that I learned by being a history major is you can learn a lot. History will repeat itself. If you pay attention to what happened in history, it may not be exactly the same, but it will be very similar and you can have similar outcomes by having similar behaviors. So this is what I have learned from the past, and I'm doing that right now. I realize that 2023, we are going to see probably one more rate hike. That's my guess. We will probably see a rate hike on February 1st, and then we'll probably have a pause with high interest rates for the majority of next year. That means that the market is going to be staying quite uncertain for the rest of 2023. In the meantime, while the rates are high, there's going to be people who are going to be looking for where they can put their money. The housing market is most likely going to be coming down. When rates go up in the housing market, you end up seeing housing prices come down. They have not come down significantly yet, but a lot of these rate hikes still have yet to take effect in the market. So when we do get to that point, we are anticipating in some areas might see 15 to 20% drops in housing. That's just an estimate right now, but looking at these numbers, that would be an ideal time to then buy that real estate. If you buy real estate for the purpose of maybe renting it out as an Airbnb or a multifamily home, now you're going to have other people paying for that mortgage and you're going to have some income coming in. That's more cash flow generation for you to be able to continue putting into the stock market. Now, if we end up hitting the bottom in the stock market, let's say around that April timeframe, and then we end up trading sideways for maybe 12 to 18 months, you'll have time to buy a house, get yourself some cash flow generation coming out of that, and then you can put that money into the stock market. That's just currently right now. I'm not predicting the future, but that's currently what my plan setup is I'm looking to buy that house, going to take that cash flow, and I'm going to start putting it into the stock market because I think we have some time between probably maybe early 2024 before we really start coming out of this where we're at right now. So I think we've got some time. And so there's other things that we can invest in that time. This is something we're actually going to be talking about on the live stream tomorrow when we have Jen and Adam on discussing areas in the near term that we can put our money to generate better returns in the near term so that we take even better advantage of the stock market before that turns around. So if you guys want to check that out, that will be on tomorrow night at 6 p.m. Eastern time. And so while yes, I am still extremely bullish on Tesla, I think Tesla is going to be the best stock anyone can buy over at least the next decade. So I'm still going to be adding. I have not changed my strategy whatsoever. I still add every single day. I added another $10 today at $148 when we dipped down. So that's what I am still doing. I'm still following that strategy, but I'm really focusing on that cash flow generation. So while that number is staying the same that I put in every single day at $25, I'm bringing in even more cash from the outside and putting that into a stock cash pile. Currently, right now in my portfolio, I have 11% cash, awaiting for us to dip down further. If we get to that 140 level, I am going to deploy half of my cash at that 140 level. I'm going to pay attention to things and I will keep you guys posted on here because if we're falling down really far, really fast, or something else happens in the market, we've got to be agile and make adjustments. So this is just my current plan, but I'm still being agile and paying attention. And that's really what it's all about. Right now, it's not about predicting the future. No one can do that. The only thing you can do for yourself is prepare for opportunities. That truly is the name of the game right now. We are going to see a lot of opportunities and preparation to take advantage of those opportunities. It is what is going to help us even more when the markets do turn around. Because again, you look at what the prices that you're buying things at, the lower you can buy them, they are going to turn around. You're going to be able to multiply your money even more the lower you buy. It's not about finding the bottom, it's about being ready to take advantage of lower prices and getting somewhere near the bottom. And of course, dollar cost averaging every single day guarantees that I'm going to have at least a good chunk of my money somewhere near that bottom. And so jumping into the charts, of course, we have seen ourselves just falling down, dead cat bouncing one after another. Still just coming down. We did bottom out today at that 145 level. We ended up closing just under 150 at 149.87. We are still in that oversold range at 28.48. But again, we look back at history, we were oversold for a couple of days here and there along the way. So we may be down a little bit further, but I am anticipating a little bit of a relief rally coming. But again, that relief rally might look like this and then turn into that dead cat bounce again. Do not know for sure, but I am being prepared for it. And now don't forget, we do have that gap that comes down to 137. So we will be monitoring that because I have a feeling we will end up getting down to this level to close that at some point. Don't know for sure, but just seeing the way we are trending, that might end up happening. So now we do have that Santa Claus rally that might be coming up. So maybe that's what we get here is we get to this oversold range. And then for the next week and a half to 2 weeks, we rally up a little bit and then we come back down again. Truly don't know. January 2nd, we will be getting the numbers for Tesla when it comes to production and delivery. If those numbers, we've seen all year long, if the numbers come in great, we're going to sell off. If the numbers don't come in well, we're going to sell off even more. So again, a lot of this right now is out of our control, and it's just a matter of what can we control. What we can control is our preparation to take advantage of these opportunities because my long-term thesis still has not changed on the company. And so Lee from Tesla Economist over here puts out a tweet. You can no longer order a Model Y or 3 in the US. You have to buy now from inventory, trying to push deliveries for the end of the year, stopping people ordering to receive the tax credit. So I had mentioned this morning. Tesla did text me over the weekend saying that if I wanted to take my delivery, I can get that $3,750 off of my vehicle, and I would get the 10,000 miles of free charging from the superchargers. So I'm still not taking it because, as I had mentioned before, I think 2023 is going to present us with the best opportunity to invest our money. So personally, I think it's wiser for me to put my money into the market, housing, whatever it can possibly be, rather than putting it into a Tesla. So that's where I am making that decision. But other people may want to take it. The numbers that you look at for when it comes to what they're offering, very enticing deals. And there is quite a bit of inventory that is out there. Now, I did text them back because they did cancel my order twice. And I asked them again, I go, hey, it's been canceled. Can it get put back on hold? Can I take my original one? And they did not respond to that specifically. So I don't know if I would still be able to do that. I didn't dive any further into it. I had more important things going on, knowing full well that I'm not taking it. So that's where I'm at. But we've also had some other rumors coming out. And one of the thoughts around why Tesla is kind of not doing any exports really out of Shanghai, and perhaps why they are pushing current inventory here in the US, is something that Lee over at Tesla Economist actually had mentioned on our live stream last Friday. And Gary Black mentioned it here as well. One intriguing idea is that new hardware may be coming in January of 2023. That could explain why Tesla chose not to export excess production in December from China and instead put on year end promotions to clear out excess inventory, since no one would want Teslas with old hardware. And others have speculated that new Tesla hardware could add back HD radar to FSD. When I first floated the idea back in June, I was told to stick to finance because Elon said that vision was all that was needed and radar was just a crutch. I guess things change. So I know that this was something that had actually come up recently about, Tesla using the radar and getting some HD radar. Whether it's actually going to be used for FSD or not, we don't know fully yet. But Elon did say in the past that vision is all that is needed. But he did say that if there was an HD radar that made it worth it, then it could be added back in. So Elon did say that in the past. Perhaps this is what has now come to fruition, and we're going to see this. So looking at this, it kind of was another small piece in the back of my mind as to why I didn't want to go and take a delivery now. Because if we are going to get these vehicles with hardware 4.0, I'm going to want that because, why would I not? The vehicles that people have right now obviously are still amazing vehicles and they're still going to be perfectly fine in the future, but I can get hardware 4.0. And maybe by the end of 2023, we see prices coming down. We've got Project Highland coming out for the Model 3. That could potentially bring down the cost of the vehicle significantly. In turn, that might bring down the price of the vehicle for consumers. If Tesla does that, we may see the price of the Model Y come down as well, especially if we're going to get into tougher economic times. That might be what happens. Thinking about some of the interest rates, I have very good credit right now, and they were still going to give me 5.99% interest rates, which is extremely high. When I initially looked back at financing back in March, it was around that 3.99 range. So interest rates have gone up significantly. So another reason to not buy my car now is because in the long run, the money savings I would have on that $3,750, even the supercharging, would all be washed away because of all the interest I am paying on the vehicle. So just like with the housing market where interest rates go up and the prices of the houses will come down, the same will hold true for other things as well. Vehicles will be included in that. So for me, just being wise with my own money and sharing with you guys what I'm doing, you guys don't have to do it. You got to do your own due diligence for your own self because everyone's situation is different. It just makes a lot more sense for me to put off buying this vehicle, to take my money and invest it. And tomorrow night, we're going to talk about some places you can invest your money again for the near term that are going to net you some better returns so that you can further invest it into Tesla later when we're still at these lower prices. I don't think we're going to see a massive run anytime soon. So I think we've got some time to add. So, being as we have time to add, let's get some money built up. You can even go to Robinhood and get 4% returns on just a high yield savings. I've got my money in CDs on TD Ameritrade right now, or I'm getting almost 4% returns as well. Considering the stock market and all of our stocks coming crashing down at the moment, we're clearly not getting any returns. So if I can actually get some returns while the stock market's coming down, it's like I'm building up cash while the stock market's coming down, so I still have time to go ahead and buy at lower prices with even more cash. It's just being a wise investor, not being bearish on Tesla stock itself. It's actually being extremely bullish on Tesla, trying to save up even more money to buy even more stock for less because I see it doing so well in the future. So that's my mentality. So if I can put off buying this vehicle, thinking that the prices may come down by the end of next year, and if not, remembering that in 2024, we are actually going to be seeing a rebate versus just a tax credit. So you'll get $7,500 off of the price of the vehicle at that point as well. So you might have lower prices and get that EV tax credit with another $7,500 off, just doing a lot of different things. And of course, I'm keeping all of my different options open as to what I can possibly do. But again, keeping this cash on hand, keeping cash flow coming in gives me that opportunity to really be agile and take advantage of any opportunity that comes my way. Plus, I can take a lot of this cash and reinvest it into the channel and my business that I'm building for even more cash flow generation in the future as well. So that's what I'm doing. Again, I strongly recommend, not financial advice, but strongly recommend finding any way to build up any sort of cash and cash flow for yourselves to take advantage of the opportunities we are going to see in 2023. So I hope this was helpful today. Again, I just want to reiterate, not being bearish whatsoever on Tesla. I'm just being realistic about the macro environment and actually trying to share some wisdom with all of you as far as what you could do to actually better your position in Tesla in the future. Because I think the stock is going to do very well. And I know a lot of you out there are really just, like me, you're just a little guy and you're just trying to save up, as much as you can to buy little fractional bits here and there. And the lower the stock price comes, the more we can buy. A lot of us little guys, if the stock price was still $350, we wouldn't be able to buy as much. We wouldn't be able to catch up. This is giving us that opportunity. So I know for some of you out there, you already built up your positions. You're not looking to add anymore. Yeah, these times are going to stink. They really are. So you either have to kind of turn away and let it go, or, whatever you need to do for yourself, we will come out of this. So this is really for the people who want to add more. This is a great opportunity for us to do just that. So let me know your thoughts in the comments below. What are you guys doing to prepare in 2023 to take advantage of all of these opportunities that we could see in the housing market, in the stock market, in all of the different areas that we can invest to really garner some wealth for the future? What are you guys doing to prepare for this? Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat. That link is down in the description. And if you'd like to support the channel any further, we do have a membership program and a Patreon. Those links are also in the description. Thank you so much. Have a great one.